What's the most underrated stock? I'm going to ask you this question 3 times today. Already asked you once. What's the stock that comes to your mind when I ask you this question? This is actually a question that I came across on X a few days ago, and I will tell you today what was my answer. But first, or second, what's the most underrated stock today? Now I want us to define the word underrated. What makes a stock underrated? Does this mean that it is undervalued? If let's say Crocs is trading at 6 times earnings, does this make it the most underrated stock? I don't think so. Undervalued and underrated are not the same thing. What we mean by underrated is that the stock, the way that the market sees it, this is not the way we should look at it. Investing is based on narrative. The price of any company is based on the weighted average narrative, the story that the market is telling about this particular company. The company we should be looking at today is a company whose story doesn't match the story that the market is saying. Now, if you know the definition of underrated, what is the most underrated stock today? I want you to give me your answer. And the third time I'm going to ask the question will be at the end of the video. I will now give you my own answer. I wrote in that tweet, it is Wise. It's not because it is the largest position in my portfolio. About 22% of my portfolio is in Wise. It's because most people don't really understand what is the business of Wise and where the company is going. Most people believe that the business of Wise is cross-border currency transfers. You want to send money to your friend in another country. Let's say you live in the US, you want to send to your friend in the UK. You use Wise, you get the best rate available. This is the business. Most people believe this is the business. Of course, this is their main business today, but this is not what Wise wants us to focus on long term. The direction in which the company is going, this is something that nobody is doing today, and that is the Wise platform. You may tell me that this is uncertain in the future, so why the market today should put a value on that? But why is the market putting a value on AI? Why is the market putting a value on companies? I don't know, the metaverse. Why? This is more far-fetched compared to what Wise is doing. So what is exactly the Wise platform if you don't know? It is just Wise partnering with banks, with other financial institutions, and running in the background. Instead of you sending money to your friend on Wise, you are going to use your bank as usual. But in reality, the transaction is taking place on Wise. What makes Wise different from all the competitors is that money is actually not leaving the country. It stays in the same country. They are going to find someone else to do a similar transfer in that country where you're sending money. This is what makes Wise so cheap compared to the competitors. There is no actual cross-border transaction taking place. The banks are going to profit from this because when you're sending money from your bank to your friend's bank, they are intermediate banks. So if you can cut these intermediate banks and no transaction is necessary, of course they are going to use it. This is why Wise can sell the Wise platform to the banks. Instead of competing with those banks, because Wise is not a bank, they don't have a regular banking license. I know they are trying to get one, but it's not to offer loans like a normal bank. It's just to be able to be on the Federal Reserve System to transfer money, and in other countries too. That's why they're getting the license. But it's not really to offer loans like Revolut, like a normal bank is going to do. Because the business of a bank is not for you to deposit money, it's for them to loan you money. That's the business of a bank. Coming back to Wise, by partnering with the different banks, the volume increases. And with more volume, the lower the price of each transaction can get. This is why Wise, each time, the take rate is going down. Now it's 0.52%. And this is what the market doesn't like, that the fact that the take rate is going down. If Wise wanted, they could go even lower than that. They could use the extra cash they're making from interest to lower that, but they don't want to do that. They have said that they don't want to be dependent on interest rates. Competitors such as Revolut is doing exactly that. The reason why their take rate is so low is because they are using other parts of their business to finance the cross-border transaction, which is something Wise doesn't want to do. So when you hear the argument that there is too much competition in fintech. Everyone wants to lower the take rate, and that's why I have heard some people saying that they don't invest in fintech for this reason, that it just goes to zero. They prefer investing in company that can raise prices. You have to think in terms of volume. I agree that sometimes it's better to sell a high ticket item to a few people, like the Bloomberg terminal. I think it's $30,000 a year for one person to use. But now it's a media company. Let's look at Facebook, Meta as another media company. Of course, the revenue per user is lower, but they need high volume of users. So this is where Wise is going, and there is nothing wrong with that. You can either be high ticket or go through high volume, or if you're good enough, you can be both, like Apple. One business I can give you as the best example would be Costco, which is a wonderful business, one of the most beautiful businesses I know. The way that Costco is able to achieve low prices is because of the membership. So it's just volume for them. It's getting the maximum number of members, getting the maximum sales, and able to maintain lower prices. If the markup on Costco is 14%, so what they get from suppliers, they don't sell it at more than 14% to the public. They could go higher than that. Competitors go higher. Walmart is higher. They could go even lower than that if they wanted, but then they won't be that profitable. So Wise is in the same situation. Of course, the take rate is going down as the company becomes more profitable, the company performs better, because as volume increases, the capital expenditures for the company doesn't increase. It's not like the volume is 1 billion, now it goes to 2 billion. You have to build the factories to achieve that. The incremental capital expenditures needed is not that big. So the more volume comes, Wise will be able to lower prices to such a way that the competition cannot compete with Wise in order for them to remain profitable. There are some companies trying it, Revolut, but as I told you, this is being financed by another business segment, not by cross-border transaction like Wise. Wise is financing its business by itself. Of course, they have other businesses now, of course, and this is something important, is that in the future, if the take rate of Wise keeps going down, they have other business ventures that they can make profits and return cash to shareholders eventually, like any investor would want. But what about the Wise platform? If they are partnering with banks, they want those banks to get better rate on the app. Eventually, this will take the take rate even lower, which is not something bad, because more banks coming on the Wise platform means more volume. This is what Wise is seeking, and nothing wrong with that. Like we said, this is the business of Costco, and this is also my business as an investor, as a pro investor on eToro. If you want to be a successful investor, especially full time, you have to think like Costco. I recently wrote a newsletter on this. I'm now on Substack. Please check it out. If you're interested, please subscribe. I will post once a week there. It's completely for free. I will not charge you for any newsletter. If I do, please remind me that I said that in this video. Coming back to Costco, to Wise, recently I watched an interview from someone working on the Wise platform in the Americas, and she said something interesting, something that I have been telling you for years, that Wise want to be the plumbing in the background. They don't want to be the foreground anymore. So it's not about the Wise app, it's about the Wise platform. The transactions going in the background. It's just like you paying with a credit card. You don't really think about Visa or MasterCard when doing the transaction. You think of the merchant thinks of his bank, you think of yourself and your bank. But in reality, transaction is taking place on the Visa or MasterCard network. The card networks are important, but it happens in the background. Now you may ask me, why don't the banks do it to compete with Wise? They tried, HSBC tried, but it's hard. They may have the volume, but in a single bank, maybe a few currencies. But to have the volume with so many currencies like Wise, you need millions of customers worldwide. And why not other competitors, other fintech companies try to do the same thing? As I told you, nobody is doing that today. If they try, the fact that Wise is lowering the take rate so much, it will be impossible for them to compete with Wise. Let's say someone else wants to start a business and try to compete, they have to go at least lower than 0.52% take rate, which is very hard. So this is the mode of Wise. It's getting more and more financial institution on the Wise platform, which is today only 5% of total transactions. In the short term, medium term, they want that to be 10% in a few years, and in the long term, they want that to be 50%. But I believe that it can go even more than 50%, because this is the way, if Wise wants to differentiate itself from the dozens of other competitors. It already does better. They have wonderful management. Mr. Korman is one of the greatest CEOs. I like him, shareholder friendly. But what about the business itself? You need great management, but you also need a great business, something that makes you different from the rest. And this is what makes Wise different from the rest, the Wise platform. And this is why I say it is the most underrated stock according to me. You may not agree, maybe you know another company I don't know about, because the story that the market is telling us about Wise, take rate is going down, interest rates are going down, there's competition, they have to keep lowering take rate to compete. Yes, but what about volume? Yeah, volume is not increasing that much. Their competitors increasing more rapidly. Yeah, but they are partnering with the banks. Any of the competitors are doing that. This is a story of the market. I don't know why does it really talk about. That's why I believe that Wise is the most underrated company stock today. Now I will ask you a third time, what's the most underrated company today? You may not say Wise, you may say something else. Maybe you would think it's Booking Holdings. I would recommend you watch this video next. Have a nice day and goodbye.